All right. Let's talk about the banks. We all are being taught the same generational curse. We have to make money. For who? For us, for our families. That's what we say. That's what we're taught. But we know, well, I learned later in life that the government takes 40% of all the money you make in life. I'm trying to keep this within 10 minutes like usual, right? You make 60% of the money in life, and then 40% goes to the government. And part of that 40% is supposed to go to Social Security, and then when you get of age to pull from your Social Security, So how could Social Security be depleted if citizens are constantly working and constantly putting in their 40%? Every time you work a job, you have to give that 40% to the government. So how could Social Security be depleted? But anyway, these are the questions you have to ask yourself. I didn't know to ask myself these questions. I didn't have a worldview. Now I have a worldview. I understand what's going on, and I'm using the charts to tell me what's going on in different aspects of how money moves through the system and how it's off the backs of the people. Someone's pocketing these monies. And there you go. Government, church, state, county, and city, predator. They don't say, oh, well, we're just not going to take it this time. No, they take it every time. That's not what this message is really about, but we have to have a focus here, all right? We're talking about the banks today. We're talking about how money moves today. When we make our money, more than likely it's going to have some type of a transition through a bank. So I got listed here the banks in order of their price. JP Citibank, Wells Fargo, and Bank of America in that order. I have a JP Morgan account. I would never get a Wells Fargo or Bank of America account. I just don't like the history of people telling me what they had to deal with these banks. So I never really, maybe I had a Bank of America account at one point, but I have to go with the big dog, right? I've never been to Citibank. I don't know much about it, but you look at the prices and you see, okay, you probably want to go with the one who has the most, I don't know if you want to call it clout, but the price is the price for a reason. What would I rather have, Bank of America or JP Morgan? Look at the price. Most people don't know these prices at all. They know of the banks, but they don't know how much the bank stocks are worth, right? And again, the basic scale of 100. Anything with a price will respect the scale. What I want to talk about is the FDIC. Supposedly, when you have your deposit going into a bank, it's supposed to be covered by the FDIC in upwards of $250,000. If the bank fails, you're supposed to be covered up to $250,000 of deposit within your bank. I'm hearing rumors that this is not necessarily true. This is just what they're saying. So you want to be very careful, because a bank can fail. All you got to do is look at the history. Banks fail. Maybe not the big banks, but the smaller banks, any bank can fail. So you have to be very careful about where you put all your funds, all your capital, right? Which is why, okay, when I'm showing you these pictures, what are these pictures? This is my WeBull account. My WeBull account allows me to look up all kinds of stocks. It's a brokerage. It's like a bank, if they want to call it. It's the best thing I can compare it to. A place where you can put your money. I'd rather put the money in a brokerage than I would want to put it in a bank, because I know that the brokerage is covered by the FDIC, for sure, for sure. I can't give you that guarantee on a bank. I can give it to you on a brokerage, because that's what brokerages do. They move money. Now, supposedly, when you have your money in a bank, you get this what's called a 2% whatever you get back for being a part of that bank. You're supposed to get a 2% APR or whatever per year. They're trying to give you 2% back every year. And then they're going to take your money and they're going to lend it out and make thousands of percentage points on the money that you depositing into the bank. They lend your money out before you even get to touch your money in that bank. When you get your deposit, by the time you get your deposit, they've already lent out your money. And then they offer you 2% a year. It's a slap in the face. I had to learn how to trade, which led me into coming across this type of information. And I know I need to explain this to people, because I think a lot of people don't know this stuff. Now, my brokerage, when I put the money in the brokerage, I could let it sit there and do nothing, or I can put it into ETFs, electronically exchanged funds, traded funds, or I could put them into companies like JP right? Why would I put my money in JP and get 2% back when I can put the money into WEBULL and buy JP and get 1,000% back? How do I do that? Well, if I bought one share of JP it would cost me $350. So that's implementing my money, right? I'm not letting anyone take my money and do what they want to do and give me a percent. No, I can take my money and do what I want to do and make a percent using the basic scale of 100. Buying low at a discount, selling high at a premium, and staying out the middle of structures. So what's the ideal position for JP? I don't want to buy it at 350. That's at the top. I want to buy it at 150 at the bottom. See? Now, once you understand that that's how money moves, that's how the price moves, price action is king, you understand how price moves, now you can make qualified, educated decisions, executive decisions with your capital. I don't have to buy 1 million shares. I just need to buy one. If I can get one right, I can get 10 right. If I can get 10 right, I can get 100 right. If I can get 100 right, I can get 1,000 right. Understanding how finance works. And again, we're talking about finance now. We're talking about the Clarity Act. We're talking about the Genius Act, which passed last year. This year, we're talking about the Clarity Act. Why hasn't it passed yet? Because the banks are going at it with crypto. Traditional finance versus decentralized finance. The banks versus crypto. The banks being traditional finance and crypto being decentralized finance. The new financial system. They're trying to meet at the line in the sand and come up with an agreement to where both sides can get what they want out of this Clarity Act. Because once it's passed, the floodgates are about to open for the people, right? Are you going to deal with more of the banks, or are you going to deal more with crypto? For me, I'm dealing with crypto. I'm going with the new financial system. I'm going with the blockchain. I'm not going with the SWIFT system and traditional finance. I'm going with the blockchain and decentralized finance. As you should. It's not trading or investing advice. But there's a new day, right? And it's going to come with that Clarity Act being passed. So I just wanted to put that out today. This is the 10-minute two-piece, and I gave you 4 companies, the banks, right? And understanding that they don't want you to go to crypto. They want you to stay with the banks, and they want to continue to give you the 2%, where you can go to decentralized finance and get 100%, 1,000% on your capital. And you need someone to explain that to you. And then you can go on and do your own research, because I can only tell you so much. I think I tell people a lot of good things, but you have to do your own research and make sure you fully understand. You know, we have AI now, we have the agents. You can just type in questions and they'll give you as much explanation as you need to have, and you can get to the business. So shout out to everyone who's paying attention. The community of traders is what we do it for, right? You can either be the slave and trade, or you can be the slave and be traded, and then be taken advantage of, and all the abuses, the abusers, right? You have to pull away from the abusers so that you can start your healing process, and then you can move on and do great things in life. So for the people, not the profits, that's what we do it for.